stress in the Global South. This session is jointly organized by the Policy Center for the New South, the Reinventing Bretton Woods Committee, and the Initiative for Policy Dialogue. Please welcome on stage the moderator for this session, Jorgelina do Rosario, Emerging Market Correspondent at Thomson Reuters. And the speakers for this session, Barry Eichengreen, Professor of Economics at California, Berkeley. Martin Guzman, Director of Initiative for Policy Dialogues at Columbia University. Nandalal Veerasinghe, Governor of the Central Bank of Sri Lanka. Jorgelina do Rosario, the floor is yours.
Hello. Hi, thank you. Thank you for staying here for the last panel of the day. Thank you, Barry. Thank you, Martin. And thank you, Nandanal, for being here. It's a pleasure to moderate this panel, and thank you for the invitation. We are here on the sidelines of the World Bank and International Monetary Fund meetings, where policymakers, academics, analysts, creditors meet to try to solve the world's problems. It's a big challenge, but I just wanted to briefly read a list of the main takeaways that we have seen so far in these meetings. We have risks of more fragmentation with now a war in the Middle East, higher for longer rates, and the risk of rising oil prices. Global growth is slowing in China as well. We have a reevaluation of financial infrastructures with countries such as India and China and Saudi with more presence as creditors. We have a challenge on productivity as well and demographics in both developed and developing countries. And of course, developing countries that need help more than ever, some of them in emerging economies who have shown a lot of resilience in this crisis, but other countries that are ongoing on their restructuring processes, which are taking a long time despite the creation of frameworks and platforms to treat sovereign and local debt. I would like to kick off with a question for Governor Nandanal. Your country is undergoing a debt restructuring process. How do you think and feel like this process has been taking a long time? Has this been frustrating for the country, both for the government and for the society?
First of all, let me thank everyone for inviting me to this audience. I think when you look at Sri Lanka's experience, compared to similar countries, for example, Zambia, other Suriname, so we have made a little better progress in terms of timing and getting some progress in terms of IMF program as well as some more progress in the restructuring. That does not mean that countries like ours, the issues that we are facing, especially the general public and the country at large, this timing, I think, is not necessarily appropriate timing in our view. We should be able to have a proper mechanism to expedite this process. Mainly, for example, in Sri Lankan situation, we started this process in April 2022. Now 2023, October, is almost like a year and over 6 months. Whereas during this period, without a proper kind of conclusion to this kind of processes, it's a serious challenge for countries, especially under debt stress, and we have lost market access, and also under debt suspension, and also there's a delays in reaching agreements with the IMF. So we started in April, took almost 9 months to complete the process. Obviously, part of the delay from in making with the challenges of meeting domestic situation, difficult situations, and partly because of the delays in the processes, both the IMF and also debt recycling. But obviously, we are outside the G20 framework. That is one other challenge because there is no proper framework. But we have been trying to follow a similar path, but still, in terms of challenges, I think what I am of the view, there has to be a proper recognized framework to help these countries to expedite this process without that suffering of people and less stability and time taken to reach stability, at least macroeconomic stability, taking longer time, which is very costly for any economy like ours. But we have to also recognize the fact that it's mainly we shouldn't be blaming the creditors and the IMF for things because it's our own fault. Also, we have to recognize there has been a delay from our part to have these processes in advance, foreseeing the success challenges. If we had taken actions timely manner, properly, I think we would not be in this position. But unfortunately, once we get into the position, countries like ours, then get out of this, we need to have a proper mechanism. And this is where I would appreciate the efforts taken by this Global Sovereign Debt Roundtable under G20 presidency, where they are trying to at least address some of the uncertain elements, main one is sharing information and define the comparability of treatments and the debt suspensions and requests from the countries how to suspend debt. All these issues, those are key issues that under consideration. It's good to see there has been some progress made under GSDR, Sovereign Debt Roundtable, that we had a meeting yesterday. We also part of that. We hope that process will continue for the benefit of countries like ours, so that going forward at least there will be a much more certainty in the process, much more open and transparent process, and much more sharing information both by the IMF when we engage for a seeking bailout package, as well as sharing information among the creditors on comparable, transparent, and open manner. And also we have to have a better understanding among creditors how to deal with mainly the new creditors. For example, in our case, the Paris Club has a lot of experience in this business, but whereas the new creditors emerging like India, China, this is a new process for them. So for them to get on board and learn all these things and come to a kind of agreed framework will take some time. So we have had our own problems with the timing, but compared to a lot of other countries, we have made a good progress, but still I think there's a lot of things to do to improve the situation. That is better, not only for the country that has suffered, but also from the creditors' point of view for us to be, because from our point of view, we have a strong commitment to start making all the obligation good, but need to have a proper framework which makes it easier and make it more open, transparent for both the creditors' interests as well as the debtors' interests. That's, I think, briefly what my view of our situation that we have faced based on experience Sri Lanka that we have seen compared to seeing what other more difficult issues that other countries have been facing in the similar situation.
Thank you, Governor. Barry, you have been following debt restructuring cases, and do you think that in this particular world scenario, do you see more debt distress than ever before, or more risk in this context? How will you characterize this moment right now?
Well, I see more complexity and difficulty. Your first question was, has this sovereign debt restructuring process been taking too long? Why has it taken so long? And my answer would be it always takes a long time, because we heard earlier about the absence of an international bankruptcy court. There is a formidable collective action problem here to be solved if international debts are going to be successfully restructured. And it's always been that way ever since the first wave of lending to newly independent Latin American republics in the 1820s. It takes years for the creditors to come to the table, to organize themselves, and ultimately to cut a deal. I think the current situation, as the governor said, is even more complex because the variety of creditors involved is greater than when we did the Brady deals in the 1990s, greater than was the case 15 years ago. It's the variety of creditors in the market. It's China, which is new to the market and has rather different attitudes than long-term members of the Paris Club about what to do. I have long been of the view that there will be no international bankruptcy court for some obvious political reasons, but we should continue to try to streamline and enhance the efficiency of the restructuring process. So it's sometimes said failure is an orphan, success has many parents. So I claim to be one of the parents of collective action clauses, having begun to write about them in 1996. And I think that is an example of a device that has enhanced the efficiency of restructuring. In anti-vulture fund legislation like that adopted in the UK and France and Belgium is another way to bring creditors to the table and encourage them to think constructively. As the governor said, more transparency about debts. So asymmetric information about who's owed what and whether other people are going to take the same haircut that I take will similarly expedite the restructuring process. In the common framework, allowing countries that apply to stop paying interest when they apply, which is not the case, as I understand it at the moment, will cause the creditors to sit up and pay attention sooner rather than later. So none of this is going to make restructuring swift and painless, but it will make it a little less lethargic and painful. And I think we need to continue to work on those margins.
Thank you. Martin, you have been leading the restructuring processes for Argentina when you were finance minister. And you have always written about too little, too late on debt treatments and how global architecture on debt treatments should be proposed and moving forward. How do you see in the context the creation of the Global Governance Roundtable and the common framework? The common framework was created first, then we had the Sovereign Debt Roundtable to try to, well, capture some of the main themes that the common framework focus on, low-income countries were taken. What are the main takeaways, the main positive aspects of these common frameworks, and what do you see that is lacking?
Thank you, Jorgelina. So the reality that we face is the one that both the governor and Professor Barry Eichengreen described. There is a missing piece in international financial architecture. So after World War II and the financial architecture that we have today, of course it has been evolving over time, was created, there was no creation of an international mechanism for sovereign debt restructuring. You could imagine what would happen to insolvent corporations if there was no bankruptcy code. What would be the characteristics of the restructuring processes to resolve an insolvency, and what would be the efficiency or inefficiency consequences for companies in those situations and for the economy as a whole. Well, we don't have anything remotely close to a formal framework for restructuring debts when debts are unsustainable. And when debts are unsustainable, not restructuring the debts just leads to a worse economic situation. And some holders of the debt, some creditors may benefit from that, but the creditors in the aggregate get worse as well if the debt payment capacity of the country falls because of a destabilizing economic dynamics. So the situation and the delays that characterize the case of Sri Lanka are more the norm than an exception. That's common, unfortunately, for the workings of the global economy. And we've seen some incremental progress over the last few decades. For instance, the adoption of the new collective action clauses that were tested for the first time in Argentina's restructuring that I led in 2020 certainly helped, but they are far from resolving the myriad of problems in terms of both sustainability, the conflict between the debtor and the creditors, and the inter-creditor disputes that arise in restructuring processes. But I agree with Barry, that's a reality we face, that's not going to change. We're not going to have an international mechanism for the restructuring of sovereign debts. So addressing these problems will involve, in the current context and given the universe of creditors and the set of debtors in distress, geopolitics. But the geopolitics today, we know it's quite difficult. That's the lens through which I will see the creation of the IMF Global Sovereign Debt Roundtable. So the G20 Common Framework intended to be a forum for coordination of the Paris Club, non-Paris Club, mainly China, creditors and the private creditors, but it just didn't work. It was a failure. And the way I see the creation of the IMF's Global Sovereign Debt Roundtable is the US and China just can't coordinate. They can't talk to each other. So they said to the IMF, you do it. You just do it for us. And we will see to what extent the Global Sovereign Debt Roundtable is effective. I do see causes for concern in terms of the practice that we are seeing in the context of the IMF Global Sovereign Debt Roundtable. I am going to flag one important issue for concern that's been, whose debates has been elevated over the last few weeks, which is how different debts denominated in different currencies are treated, and the connection of that with the International Monetary Fund frameworks for debt sustainability analysis. So what do I mean by debt sustainability analysis? In any debt crisis that requires a restructuring, we need an analysis of, first, whether debt is sustainable or not. The obvious answer, if we are doing it, is that it's not. Second, what is the amount of relief that the debtor, the country, or the government needs in order to restore that sustainability. And the IMF is the institution that typically performs those debt sustainability analysis. In part, that has to do with the fact that in order to be able to lend, the IMF needs to assess it through a debt operation. The country will be able to restore the sustainability of the debt and eventually recover access to international credit markets and get the dollars, the foreign exchange with which it will pay the IMF that transitorily is supposed to be providing support. After the 2008 crisis, the US financial crisis that became global, there was a significant increase in global liquidity, and with that, an increase not just in the exposure to debt with the private sector, but also to an increase of debt denominated in domestic currency with foreign investors holding that debt. So if you're a foreign investor, you naturally, and you hold bonds of a country in foreign currency, and your neighbor, another foreign investor, holds bonds in domestic currency, you clearly see there that there is a problem of comparability of treatment. So you care about what treatment the other bondholders are going to get. The problem with these debts is that they are very different in nature. They mean different things also for the development of a nation. And that means that the frameworks for treating them should be different. However, the way the IMF, in the context of their global roundtable, is dealing with this issue is through a framework that pools, this is for the so-called market access countries, it pools the debt in local currency and the debt in foreign currency. And it defines thresholds for the debt stock to GDP that the country should not pass for the financing needs, called gross financing needs of the country, or the debt service relative to GDP or to exports. It defines thresholds that should not be passed. And then, when counting the debts and the payments to meet those thresholds by pooling the different debts, the outcome, the incentives that creates is to restructure debts in local currency, but that has significant deleterious effects on the future development of those markets. And again, the problem is that the frameworks should be different. So summarizing, I think we will continue addressing the current problems within the current frameworks, and given the nature of the problems and given the geopolitics, the role of the IMF will probably be more important than in the recent restructurings. And given that situation, the IMF should adapt its practices and models to play a role that is more positive than the one that is playing today.
Well, we brought the full debt dictionary now that we have the debt sustainability analysis, the comparability of treatment. There was a statement yesterday from the Sovereign Roundtable saying basically that there's no agreement between bilateral lenders and private creditors on, the access maybe that on comparability of treatment. And as we know, creditors have asked during this latest debt restructuring more access on how the DSA is performed, how those financing gaps are calculated. Barry, what do you think about that? Do private creditors need to have more access to the DSA? How can that be accomplished, yes or no?
Yes, can't hurt. So I looked at that roundtable statement briefly this morning with the caveat that I'm 10 hours in the wrong time zone. I didn't see a lot that was new and notable in the most recent statement, although it was announced as a great triumph for the global policy community. I did notice that dissent from private creditors, that what they were being asked to do was excessive, but I would have expected to see a statement to that effect from private creditors. As I understand it, the reservation that the fund and others have about releasing more information about their DSAs are that if the outcome is less than favorable, that can provoke the bad event that the DSA is intended to avoid. I think there are dangers of that sort, but what we've learned about bank regulation and so forth is that the more information that is provided publicly on a regular basis, the better the outcomes will be in the long run. So, going back to what I said before about how restructurings take time, there eventually becomes a tipping point where even the private creditors realize that this is a very bad equilibrium to be in, and they then become willing to participate. But alas, we apparently haven't come to that tipping point yet.
A follow-up on that, Barry. So how soon do you think the DSA has to be shared with other participants, if you had to imagine a world where the IMF will be willing to do so?
So the IMF, I guess, shares its DSAs in the context of Article 4 reviews. I think it should be doing them staff resources permitting on a more regular basis and making it the norm that it shares both the assumptions and the outcomes with the markets and with the public.
Thank you. Variety of creditors has been mentioned at the beginning of this panel. Governor, we had a big announcement from Sri Lanka this week on a deal, a principle of agreement with China. Can you tell us a little bit more about that? What will be the next step on that agreement you have with the country, with China Exim Bank specifically?
on the this Sri Lanka's situation, obviously we were having parallel discussion with OCC, Official Creditor Committee, and then obviously China didn't want to join, although they were invited. They prefer to stay out and have a bilateral discussion. So from our point of view, we had 3 parallel channels. One is with China bilaterally, then OCC with our advisors, and then commercial creditors through our creditor committees. So when you have this kind of process parallelly going, then obviously OCC, Paris Club had this mechanism of sharing information much more transparent manner. At non-Paris Club members are observers, and all the technical works had been shared, and a lot of influence sharing was happening one way to Paris Club and non-Paris Club members. That probably help in non-Paris Club members. But on the other hand, bilaterally when we are negotiating with China, it was between Minister of Finance and the Exim Bank as a counterparty, as official creditor, because in China it's a different situation. Although sovereign debt is government-owned institution like a state-owned enterprise, Exim Bank is considered as a counterpart. So we started this process. And there, what happened, I think we certainly welcome the Chinese announcement that they came forward. But I must say that is a bit of a surprise to us as well, because we had discussion with the Chinese Exim Bank, and had, while the discussion going on, we had some understanding between 2 parties. And after we come to a certain understanding, then China unilaterally from their side, they announced that there has been this thing that basically surprised other partners, and this is where the point that Martin made, geopolitics also play a significant role in my view. That's why I think countries like us are facing these geopolitical tensions. I think it's very difficult to balance from the data point of view, because it's all up to the creditors, and creditors are having these geopolitical issues. Obviously, they have their own differences, their own issues between those creditors, key creditors, whereas we are basically will have to face this situation. In our case, obviously China made this announcement early, and while there was expectation, OCC also will make that announcement, but somehow I think this is a good development for us, because one creditor completing early, because there is no proper sequencing. Someone who come to an agreement earlier, I think we certainly welcome that they made the announcement, then others can follow, and that will encourage others to come on board, and all including the commercial creditors, this will encourage everyone else to come on board, and also put some pressure on the IMF also to complete the negotiations and announce what we call staff level agreement. And then this is another point I just want to share on this DSA. I think let me share a small experience that we have. Once we made the request from the IMF for a program, EFF, then they conducted this DSA. Then based on the IMF rules and regulations, DSA information cannot be shared until it's approved by the executive board, authorities, the executive board. But, somehow when India gave us financing assurances, they publicly announced a letter which included the confidential information that was not supposed to, put out by the IMF. So that, in fact, that it was found quite useful. That leaking that information accidentally was helpful for us to, come to a better agreement with other creditors, so that is all public. That, in fact, I think is a one learning point where if the IMF can share as much as information, even the parameters under DSA, would certainly help countries to reach agreement, make progress faster than following the old institutional rules. You wait until then only we'll share that. All these things basically taking longer time than what we should have to expedite the process, and that's the one positive development. So I think the Chinese one is good development. We hope that others also will follow, and that will help us to come to agreement sooner and make good progress going forward.
Of course, Governor, we know by now that Sri Lanka, as a middle-income country, is not part of the common framework. So as you mentioned, there are two different separate tables to negotiate on the bilateral creditor side. One is China and one France, India, and Japan, the OCC. So we know very little about this agreement with China Exim Bank. To my understanding, correct me if I'm mistaken, it still needs to be written all the details. So my question will be, is China willing to give enough information to the other creditors, provided maybe by the government of Sri Lanka, to secure that comparability of treatment could be measured and applied in this debt relief process?
Yeah, of course. I think from our side as debtor, and we have already given a very strong commitment to follow open, transparent, and comparable process, and sharing all the information open and transparent manner with all the creditors. So while having noted that our commitment, when you have a bilateral discussion kind of understanding, first I must say this is agreement in principle, it's not final. This is some understanding that we may agree to certain terms and conditions. Because this is a bilateral agreement, obviously we need to have a consensus from the other party to share that information. Both will have to agree that we share. From our side, we in fact, as soon as possible, our intention is to share that information with all the other creditors, including OCC and everyone else. That information, obviously, for the purpose of transparency and also anyone to check the comparability. Although we are confident and we have been assured that this is comparable with what we expect from everyone else, but we must be able to, we are willing to share that information with others, subject to we need to obviously need consent from our partner that we are in that process. We hope we should be able to share that information as soon as possible with other creditors so that we want to make it more transparent and ensure comparability so that we can make progress. I think this is where we think that we certainly will do that as soon as possible.
Thank you, Governor. Martin, what's your take on this diversity that we see of creditors? You have been negotiating that for Argentina before. Is this something we're talking about the global south, right? Do you think this is going to change in the future how the debt treatments for other countries in Latin America as well could come up?
So the universe of creditors today is clearly different than in the 80s when at least when my continent had a debt crisis, the times of the Latin American debt crisis after the spike in the interest rate that the Federal Reserve of the United States implemented. Today we also have a countercyclical, not countercyclical, a contractionary monetary policy stance that creates more debt distress in the world, and particularly in the South, but the channels are different and the composition of creditors is different. The issue of transparency it goes two ways. On the debtor side, this complaint about lack of information on the debts of a country with China, that could be addressed through domestic legislation. If a country has legislation that requires that there is a public registry of all debts, then there is no problem of transparency on the debtor side. Argentina is an example in that sense. In the 1980s, there was no public registry of the debts of the country, so you had to dig into the central bank to see what your debts were, and that actually gave, at times, an advantage to other constituencies at the moment of debt negotiations. But in the 90s, the country adopted a law called Law of Public Financial Management that makes mandatory to have a public registry of the debts. So it's, except for the contracts between central banks, Everything else is public information. When Argentina negotiated that with the Paris Club, the problem of transparency with China, of the debts with China, was not an issue. It was publicly available, the information. So that's one dimension in which I think countries benefit from those laws, also in terms of having more information themselves. Sometimes it's the governments themselves that don't have the information. So it gives more power to the governments to negotiate debts. On the other side, what happens, and many times, is that the debtor knows much less about the creditors than what the creditors know about the debtor. The debtor, for instance, may not know who holds the bonds, or the debtor may not know what the incentives of the different stakeholders are, because some may be insured through credit default swaps, and that's an issue that is not so discussed in the public debate. But in my view, it affects, it creates an asymmetry of information that has deeper consequences in debt negotiations.
Thank you, Martin. Barry, we're seeing, of course, higher rates. Emerging market economies, most of them has been very resilient to the latest crisis, have been hiking rates before other developed economies. They have been facing, especially in Latin America, right, where the inflation experience is really there in the policy making. So they were aware of that when that cycle started. Now we are seeing that, of course, it's again difficult for some economies to tap markets. The world of maturities is going to be larger in 2024 and 2025. Do you think that developing, banks like the World Bank and the IMF are reacting with money and with, technical assistance for these future challenges? We don't know when the markets will be available for a lot of these economies.
No, I don't know. I'm not aware of dramatic new initiatives other than uncommon, non-framework, et cetera, that we talked about before. You raise an important point that major emerging markets in Latin America and Asia have made progress in the direction of countercyclical monetary policies, so they don't have to follow the Fed in lockstep to the same extent that they did in the past. Countries that have more independent banks and quasi-inflation targeting regimes and more flexible exchange rates have used that policy flexibility, I think, in broadly positive ways by moving early so that they can now move in a more countercyclical direction. What all this implies going forward depends on whether you think we're in a new global interest rate environment or not. And I, for one, am not convinced. So I think the markets have overreacted to that idea that interest rates on emerging market debt depend on the underlying real natural rate of interest and on expected inflation. And it doesn't seem to me either of them either of those variables have changed in a significant, persistent way, that the determinants of the real rate are very slowly moving. They're things like demography and household savings behavior, which move over decades, not over weeks. And I think we are seeing the Fed and other major central banks making rapid progress now on the inflation front. They've credibly signaled the markets that they are committed to their inflation targets. So I suspect the new inflation regime the new interest rate regime may resemble the old interest rate regime, but it just may take the markets a while to figure that out.
Martin, what's your take on that?
Formulate the question, please.
Sorry? Yes. What's your take on that? Do you think that this rate cycle is going to be similar or not?
So it will depend to a large extent on what's done in advanced countries with monetary policies. If the quantitative tightening policies continue for longer, and if we are in an environment of high interest rates for a long time, naturally we're going to see more debt distress. There will be more competition for liquidity, and it will be more expensive, so we would see more countries falling into defaults. And countries that try to delay the moment in which payments are stopped will also suffer the consequences. But defaulting also, much of the cost of a default happens before the defaults, when the country loses access to financing. But today, under the current frameworks for borrowing and lending, default is also, the state of default is costly. Most of the debt issuances are done particularly with the private sector, are done under New York law, and the compensatory interest rate that a country has to pay on top of the coupons when that instrument is in default is 9%. So there are reasons why there are delays both in beginning debt restructuring processes and even in suspending payments or just not paying when debt is unsustainable. But again, a lot of what happens in the South has to do with what happens in the North.
Governor, I would like to go back to the diversity of creditors that we were discussing. And you know, countries, not only Sri Lanka, but other countries that are under debt restructuring have been feeling a little bit the same, right? Like this balancing act in which they need to talk to different bilateral creditors with different interests and different approaches on how to resolve and how to provide debt relief to a specific country. Can you share us a little bit what you can on the experience of that? Because you're leading with the IMF, China creditors, bilateral creditors from the OCC at the same time. And sometimes you just want to say, we need this review. We need the disbursements. We're doing our job. Maybe some prior actions are still needed, but how complicated is it right now when you want to deliver and move on with this debt restructuring?
Yeah, I think this is an important issue. For example, countries like us, I think what I can say, this G20 framework, one problem is that when you have a fixed framework, then it wouldn't necessarily fit into country-specific situations. It's difficult to have a mechanism that could fit all countries, especially when you take the above low-income countries, middle-income countries like ours, different situations. So we need to have a bit of a flexibility the way we move forward with this approach. That's why I think if you think about, say, a country like us, so there are different situations. For example, now, in our situation, we have different kind of, it's not necessarily similar to the G20 other countries. For example, we have domestic debt is almost 50% and external debt is 50-50 like. And the debt obviously become unsustainable. IMF announced that it's not unsustainable. Then when we think about a solution, then we have to think about what are the issues that we are going to face, what is the proposed sequencing, how we are going to address domestic issues like domestic debt servicing and also government ability to continue to operate when global market access is almost unlocked. For example, in our case, when we announced the suspension, after that, even before that, we already lost the market access. And government had to rely 100% for the government financing large budget deficits out of the domestic market. That would stress domestic market as well as stress the monetary policy, huge monetary financing, all the situations. That had basically the increase more stress on the all macro policies. And in that kind of situation, when we enter into trade negotiations, then obviously the IMF and also the creditors, when in the negotiation, need to take into consideration country-specific situation that we are facing. That's why I think it's very important to understand country's situation. And also, in our case, we had a huge stress on the banking sector because of the contraction, the economic recession. Banks are having already huge stress on top of the other debt restructuring stresses. So when you take into all these things, I think this is why very carefully design debt restructuring strategy together with the IMF and also the creditors is quite important to take into consideration country-specific situation and also sequencing. So if you look at other countries' experience, some countries done domestic debt later, some have done domestic debt earlier. But then we have to ensure even the designing of that thing, we need to ensure government can function, government can have at least day-to-day operations, financing, some way of financing while you're doing the debt restructuring, because we don't have any external access. So then other part is that when we are in the process, role of the multilateral development banks, where they need to support more. I think this is one thing that I certainly agree with China's position that MDBs should be supporting more in terms of net inflows, net constitutional financing to countries like us, those who would not have access, at least to maintain the minimum operations and maintain the kind of stability. Without that, we would be in a much more difficult situation. I think that's something MDBs need to consider, continue to have support, even enhanced support on a concessional basis, and also ability for the governments to raise domestic financing without much stress, and also preventing its impact on the overall banking system. That's also another important one, otherwise it will be a worse situation. So this is why if you look at each country strategy, is one to other is different depending on the country situation. That's something that's important thing. That's why when you talk about what is kind of a framework, and we need to have that kind of flexible framework, so that can be suitably fitted into country-specific situations. And that's, I think, important going forward.
Just a follow-up on what you have said, Governor. When you said that you agree with the Chinese creators' position, you mean that the multilateral development banks, like the World Bank or maybe the IMF, should take haircuts, or how would you phrase it?
No, please, this is not the statement.
No,
so,
no.
So basically, what I agree with that, they should be able to enhance their support in terms of concessional financing,
Okay.
to maintain and sustain the kind of minimum operations. This country is not suggesting anything about they should take a haircut or restructuring. That's not the position here.
Thank you. Martin, you want to say something?
I mean, no, I think that's a good point. It's the lender of last resort, using taxpayers' money, is not supposed to make a profit out of its lending, and that's why it has a preferred creditor status. It's first in line to get repaid. So it's an institution that is supposed to not be exposed to haircuts. However, some of the policies and the practice of its policies, not just the rules, but how it implements them, are at tension with the preferred creditor status of the IMF. Let me give you a couple of examples. Number one, the IMF today imposes an extra interest rate called surcharges if a country has exposure greater than certain threshold, or if the outstanding credit has been outstanding longer than certain amount of time. Sri Lanka, for instance, is going to pay surcharges. So Sri Lanka is going to pay an interest rate that at today's basic rate, it's going to be close to 8%, right? That's not cheap, probably even more expensive than the cost of getting financing from China for several countries. So how is this money used? For instance, to pay for the nice conference that is happening in the other building, okay? And some of the business class tickets of the people that came. Crisis countries pay for a significant part of the operational expenses of the IMF. And this money is also used to build precautionary balances, which means that the IMF is acknowledging there is risk of not getting repaid. But how come? If it's the creditor that has preferred creditor status. So you see, this is hard to reconcile, and surcharges haven't been changed even in the context of a pandemic and the war in Ukraine. So the nature of shocks has changed. Surcharges made no sense even before, but now it's so obvious it should be obvious for everyone that this policy doesn't make sense, but there is no movement. So the institution moves very slowly. And no wonder then there are countries that want to resort to China as the lender of last resort. On top of that, countries that borrow from the fund every 3 months have to pass a review. The staff changes. You start a program with, working with some staff, and then 1 year later, a significant part of the team is different. And that also creates unpredictability. So while the IMF is supposed to enjoy preferred creditor status, some of its practices are clearly at tension with that status.
Thank you, Martin. You brought surcharges back to the table. I know that that has been a big discussion between Argentina and the IMF during the latest program. Barry, what's your thought on that? Do you think that considering the debt situation right now for developing economies, maybe a temporary relief on the surcharges for some economies is needed?
I'm not a big expert on the surcharge issue. I do detect a little frustration from my seatmate around his dealings with the fund. I do think that there is an argument for the fund to take a little bit more financial risk on its policy lending. But there is an issue there that when the Bank of England takes financial risk and it ends up with big capital losses on its QE portfolio, it gets recapitalized by the Bank of England. So the change in IMF policy would presumably have to be coupled with a commitment by the members to top up the capital of the IMF if it took losses on some of the non-surcharged, more risky lending.
Thank you. Barry, we're talking, of course, about the Global South, and when we talk about lending and multilateral lenders, we talk also about finance, right, and fiscal. What do you think are the most effective strategies for managing and enhancing the efficiency of public expenditure in these regions?
So we have a little bit of echo up here on the stage. You're asking me about...
Yes, how to improve the strategies for managing and enhancing the efficiency of public expenditure in these regions.
So I don't think there's anything special about developing countries or different regions. The problem of zeroing out programs or reauthorizing them each year as a way of winding down programs that have outlived their usefulness. This is not a popular way of budgeting in any economy. So I don't know. I think the basic rules of public finance about trying to zero out programs that have lived beyond their due date and trying to figure out what the priorities are. Transparency is a solvent in this context as in others, applies equally to all economies. So pick a country, any country, pick my country, and the expenditure and the efficiency of public spending could be vastly improved.
Thank you. What do you think about that, Martin? How could that be improved from your perspective?
Let me, if I may, complement the response of Barry to the first of the two questions you just raised, and return to the issue of the IMF. I mean, we're here, and I think that's an important issue, and there's a cold reality that is worth discussing because it affects so many countries. And it's going to affect more countries in a global context of more distress. And that's where we are, and that's where we're going. The IMF is an institution that lends, so we need to, it's important to study or look at the lending policies of the fund. Let's review what's been happening since the pandemic in terms of what's been achieved at the IMF, the positives and the negatives. So one positive achievement was the new allocation of $650 billion of SDRs in 2021. But by far, the largest proportion of that allocation has been unused because it's distributed according to the quotas of the country. So for instance, the US has more than 16.5% of the shares at the IMF. So that means that it gets more than $100 billion of those 650 of SDRs that doesn't need. Countries that needed those SDRs got very little. So then the IMF said, okay, we're going to create a new facility, a new trust to reallocate those SDRs. We need to get part of what the advanced countries don't use to lend to countries that need them to deal with climate change and with the scarring effects of the pandemic. So it created a facility called Resilience and Sustainability Trust. And the idea of the management was a very good one. I mean, there was a lot of optimism in the management. I could see this. And the idea was to have a facility that would allow for significant amounts of lending with better conditions, including lower interest rates. What happened at the end? The amount of lending that can come from the RST is minuscule. And not only that, but a country, and this was discussed in the previous panel, in order to have access to that kind of facility already needs to have another of the standard programs, the so-called upper tranche programs of the IMF, which are the standard ones to deal with problems of lack of liquidity, balance of payment crisis. So at the end, this new facility has nothing to do with climate change or COVID directly. And it hasn't served the purpose that it was supposed to serve. And finally, we have this issue of the interest rates. Leave aside the issue of the surcharges. Focus on the basic rate of the IMF. 1.5 years ago, the basic rate of the IMF was 1%, 1.05%. Today, it's above 5% because the rate of the IMF is determined by the SDR rate, and the SDR rate moves with the rates of the US Treasury bonds, UK bonds, Japanese bonds, Chinese bonds, and Euro bonds. And because of the contraction in monetary policies by the central banks of these advanced economies, the cost of IMF lending has increased. So that's pro-cyclical. We are seeing pro-cyclical lending from the IMF. So this is the cold reality that we face today. And this means that we have a multilateralism that is not only weak, but the main institutions that are supposed to play a stabilizing role play a destabilizing role, a pro-cyclical role.
Thank you, Martin. Governor Barry mentioned something very important, which is transparency. This is the program number 17 on the IMF for Sri Lanka, and it's the first one that includes governance and anti-corruption as a core pillar. You, as a country, and the IMF are working together for this to be benchmarks that can be measured in each review specifically as other type of economic or financial benchmark. Is this something that is delaying this first review? Can you elaborate on that?
No, there's no such. I think I add what Martin said on the one of the issue that I have been involved in negotiating several IMF program long time as Career Central Banker. And what I see, one of the main issue as Martin expressed is a staff turnover. The way, for example, in our case, At the beginning of the program, we had the sectoral experts, fiscal, balance of payment, and mission chief of this was there. And then before the first review, the first staff had a lot of efforts and they understood situation and had good understanding of the country's situation, and we were able to come to agreement. And all of a sudden, when a new mission came in, completely different set of fiscal economists and other economists come in here with a staff turnover, then we find it very difficult when you negotiate a program with the staff and their understanding of ground situation is very, very important for us to negotiate a program. That's one of the reasons what I see current delay is that when you have new staff come in, they have to start it all over. And obviously any expert will take some time to understand country situations. That is one part of the delay that we are experiencing. But obviously, as the already other point I agree, is the revision of policies and stance has taken from review to review. For example, if I in a 4-year program, and obviously I can give one example is when you have certain actions, structural benchmarks, if that is something documented in the approval of the program, and even though later everyone realizes this is not the appropriate policy, but there's no way the fund staff can revise or change that because it has been approved by the board. Next review will have to be in after the next review going to the board. For example, one example I can tell you, there was a debate on the monetary policy in the last review, and they got us agreed to have a commitment on the policy rate increase to address inflation based on IMF had the projection of inflation will come down to single digit in end of 2024. However, we use that it will come down to single digit 2023. But because of their projections, they wanted to tighten monetary policy by another 100 basis points before the approve the program. But by the time when we had to raise interest rates, inflation already coming down sharply, disinflation, no one can justify this thing. Everyone agrees, so there's no need to tighten monetary policy further. But because this was in the document and approved by the executive board, there was no way that we had to revise that. Or say we were not to do away. What we basically did before the approval of the program or before the date, raise policy rates, and next month we brought it down, and it's unnecessary policy action. So these are the things that we are facing when we negotiate the program, because very rigid framework. There's no flexibility even for the staff. Once, even if that is the actual situation and it's obvious thing, there's no framework to adjust that thing. That is the difficulty in negotiating program. That's why it takes longer than what we think. And also let me add 2 more points that he raised, a very important point on the surcharges and cost of IMF financing. And we have seen in the past, I mean, our experience, early IMF programs, we see 0.5%, 1%, that obviously a concessional financing. But country in a debt stress and in the trying to restore the sustainability, I'm asking to get this kind of relief from everyone. And when they are giving this money, we are paying, as Gertrude mentioned, 8%. Is close to market rates. I mean, there's no concern at all. But then obviously I must recognize the role of the other multilateral banks like World Bank, ADB. Obviously, they are at some much lower and concessional basis. Whereas IMF in this surcharges and all these things wouldn't make them a country, an institution that would lend to a debt stress member at a rate that they also ask us to negotiate with other creditors. I mean, this is what is important. That's why what I see is not the value of the cost of money, that is importance of having IMF intervention, their support and recognition and endorsement. That will help, obviously, that we have recognized that part. But in terms of financing, that's not concessional at all now. This current surge, I think that has to be revised. it should be brought down at least for countries like ours, under stress, and in the process of restructuring, restoring their sustainability, lending them at 8%, while we are trying to get 1 or 2% by other creditors, doesn't make good sense. I think that's something very important point that Peter raised. He raised.
Thank you, Governor. I think it's time to open the floor for questions. I know it's late Friday. You have been back-to-back in meetings, but do we have a question over there?
Can you hear me? This is a question for Martin Guzman. Now there's elections coming in Argentina. I don't know what the chances are, but there is a chance that Milei would win the elections, and he's planning, if he says if he wins, he's going to convert to a dollar economy. What effect do you, first of all, is this feasible? And second of all, what effect is this going to have on the restructuring of the Argentine debt?
I guess you want to take a few questions altogether, right?
Yes. That's one for Martin. Let's go. Another question over there.
Thank you. I just wanted to ask, one of the reasons why it takes a long time to restructure the debt is because the amount of time it takes to obtain staff level agreement and the amount of time it takes to obtain financing assurances. This week I haven't heard much of a discussion as to whether we should be asking the fund to look inwardly as to whether its policies on financing assurances should be reviewed. Do you have any thoughts on that?
Another question there, and then we'll start with those 3 questions, and then we'll continue.
Hello, my name is Imen. I'm from Tunisia, and now in Tunisia we are living an economic and debt crisis, and also for for political reasons, we are not able to have an agreement with the IMF. So my question is, within this, I know that Martin, you already talked about the geopolitical situation, and I don't know, with this negotiation power of Tunisia, are we able to ask for debt restructuring, and do you think that IMF will do that? And also, are we able to negotiate not to pay or to reduce your charges? Thank you.
Martin, would you like to start with?
So about the first question, I'm sorry, but that's a hypothetical question that I'll leave aside. We will see what happens. Excuse me? All questions are hypothetical. Well, true, but that's too hypothetical at this stage. But what I can say is that what Argentina needs on the currency front is to recover our own currency as a currency that can be reliable. And of course, that requires a process that includes macroeconomic consistent policies. It's in the best interest of every nation to have its own currency and have the possibility of running an independent monetary policy. It is true that when the demand for the local currency is just too weak because there is no trust, there is no monetary policy, or the limits are very tight to what monetary policy can do. But all I can say is that the best for Argentina on that front will be to try to reinstate the confidence in the peso. So there were a few other questions I think all of us can address. So
Yes, of course. I don't know, Barry or
to
the
address some
governor.
of them, maybe. Okay, I will address then one or two of them. So on the issue of financing assurances, two comments on your question. So the problem of financing assurances is financing assurances from official bilateral creditors, right? Mainly today China. And an important question for the fund is whether it should be more active in the use of the lending into arrears with official creditors policy. But think for a moment, put yourself on the feet on the IMF for a moment. So China is a large creditor. So the IMF may face a situation in which it decides to lend into arrears, but it doesn't really have a clue of whether that is going to be sustainable or not, and therefore it has trouble to judge whether the other rule that has to be met to lend under exceptional access, which is that debt sustainability is going to be restored, is met or not. So it's a difficult call. But certainly there should be some adaptation, because the reality today is different than in a world in which there was just one club of official creditors, which was the Paris Club. Related to that is I think the main problem of the IMF is not that one for countries to which there is a large exposure to the IMF, but it's with the IMF itself. Let me explain what I mean by this. When a country, put yourself now on the feet of, say, Hans, who is there, CEO of Greylock Capital, and he's a bondholder of a country. And then he sees that a country of which he owns bonds has a large exposure to a creditor that has seniority. It's first in line to get repaid. So in that situation, he may think, or any creditor may think, look, I will wait to see a decrease in the exposure to the senior creditor in order to provide new financing. Because I know that I'm not first in line to get paid, and their debt with the IMF is too much. But the IMF, in order to lend, has to assess that the country will get financing from Hans. It will get financing from in the private credit markets such that it can repay the fund. So you see, when the IMF decides to provide large loans, now there is a problem between the consistency of the rules of the IMF and the financing decisions of the IMF. And there was one more question that others can address, or I can do it at the end.
Yes, Governor, would you like to comment on financing assurances? We have seen that there has been a lot of delays in latest restructuring processes between the staff level agreement and the executive board. There's a median of 55 days between those events for middle income and low income countries. For Sri Lanka, it was more than 200 days. I do not have the exact figure in my head, but I do remember the Argentina program back in 2018 was 18 days. So what's your comment on the financing assurances and the question?
Yeah, I think there are two parts. The question Deborah asked is, one is the time taken to reach staff level agreement, second one from staff level agreement to the financing assurances. Those are two steps needed to complete or get the approval from the executive board. So first part, I think time taken to reach staff level agreement is also a function of IMF ability to conduct this DSA and share that, the information with obviously inform some information to the creditors as well as to the authorities. And that obviously authorities or country also will have to play a proactive role to expedite that process. And from that point, so for example, in our case, we started negotiating the program in April. It took we were able to get this staff level agreement 1st of September. It's from April 4th month to 10th month, about 6-month period. But from that point on, staff level agreement to financing assurance and get the approval took another 6 months. This is where I think there was a discussion at the Global Sovereignty Roundtable. It was recognized that it has been a too long period for countries under stress, and ways and means how that can be expedited. There was discussion, and of course I can see, I don't know whether the media statement it mentioned that Zambia took longer period, then Sri Lanka took a shorter period than Zambia, then Ghana took 4 or 6 months, Ghana 5 months. They saw this as an improvement in the process. So that financial assurance have been at least now shortened to around less than 6-month period. I think that's still, in our view, it's too long for a country under stress. That's why I think there was a discussion by the IMF, the question that you asked, that there are efforts to reduce that, and the question that was raised IMF to bring down the time period. I think there has been discussion, but how that can be achieved, I'm not quite sure unless there's clear rules and procedures to make that determination and make the progress. I think as I can see the improvement is good, that is welcome, but there is that would sustain going forward is something that we have to wait and see.
I'm happy to answer the hypothetical question, although I suspect it wasn't my opinion that you were seeking to draw. Argentina doesn't need to dollarize, it needs to de-dollarize. It's a heavily dollarized economy, which limits the effectiveness of policy. I think dollarization would be crazy, and I think de-dollarization would be desirable.
Thank you, Barry, for that. Any other questions? No more questions? Al, over there.
Hi, my name is Jacob Plaschke. I'm a journalist here with the Danish Press Association. My question is to Mr. Martin Guzman, and I guess it's a little bit specific to the negotiation process and experience that you've had. So if that's, I understand there's some confidentiality questions and stuff, but basically, given sort of asymmetrical power relations in negotiations, and you mentioned, for instance, the lack of transparency when it comes to bondholders as a challenge, I'm curious to hear what you would say were sort of other major frustrations you had as a negotiator when, both in terms of your negotiation position vis-a-vis the other side of the table and sort of on their side. Thank you.
Thank you for the question. Any other questions? No more questions? Okay, Martin.
On the job is the lack of sleep. But no, so the two negotiations, the negotiations with private creditors and the negotiations with the IMF are of course very different. Perhaps I can flag a few aspects that I think are important for the experiences of other countries and will be important in the future. First, on the negotiations with private creditors, one of the most difficult problems is to bring everyone together, or not everyone, a qualified majority, because in the case of Argentina, bonds had collective action clauses, through a kind of dialogue that can be not just constructive, but that can happen fast. In the case of Argentina, there were 3 different groups of bondholders, and the others that participated may share their opinions, but there was a sense in which bringing them together was highly challenging, including that this is a very heterogeneous group, even in terms of experience. There are people that have been doing these things for years, and there are people that it's the first time they do it in their lives, and emotions matter. The fact that there is no formal framework means that people matter more than they should, and that's an issue. Second, I think the IMF debt sustainability analysis are important for anchoring expectations. This was discussed between Jorgelina and Professor Hegengren, the timing of the publication of that sustainability analysis. Member countries have the possibility of requesting specifically at a moment of distress a technical analysis on that sustainability to the IMF. That's a right of every member country. That's not common. We did it in 2020. Initially, the IMF didn't want to do it. The argument was that because Argentina was not under an IMF-supported program. The country had debt with the IMF, but the previous program had been derailed. Then the IMF would not know, the staff would not know what the policy parameters were, therefore they couldn't do the debt sustainability analysis. But at the same time, it was a sovereign nation, a member country, paying its fees, requesting the analysis. So you see the issue. And finally, the IMF did this debt sustainability analysis, and to some extent it helped. It did help to anchor expectations domestically and help the negotiators to deal with the typical domestic political economy problem that arises in these situations, in which there is a lot of lobbying, a lot of pressure to achieve a quicker deal, even if it's a worse deal for the country and has bad medium-term consequences. It may have helped, you should ask creditors, it may have helped in some sense on the creditor side also to anchor to some extent expectations, probably less, because the effectiveness of this analysis on anchoring creditor expectations, in my view, to a large extent depends on whether the major shareholders at the IMF support it or not, and especially the largest shareholder at the IMF. I'll stop there.
Thank you, Martin. If there's any other questions, if there are no more questions, we're going to wrap this up a little bit earlier. Thank you so much, Governor Martin Barry, for this discussion. I always think that debt, of course, is about prices, yields, negotiations, but it also, in our case, where we're discussing sovereign debt, it tells the country of stories, regions around the world, and it has been a really nice debate, and it will kick off a lot of discussions moving forward. Thank you so much, and thank you all for your participation and for being here. Thank you.
Ladies and gentlemen, thank you for your attention. We have now concluded our sessions for the day. Enjoy your evening and see you tomorrow at 9 a.m.